Hello and welcome back to the program. Let us walk you through what happened at the closing bell on Friday, and more importantly, what it all means for the trading day ahead. The headline numbers were remarkably quiet. All three major U.S. indices finished essentially flat. The Nasdaq closed at 26,729, the S&P 500 at 7,785, and the Dow at 53,732. But here is the interesting part. Futures were trading modestly higher in the pre-market session. Nasdaq futures were up about 0.21%, with S&P and Dow futures also ticking higher. That tells us the selling pressure is limited. People are not rushing for the exits. Now let us look at the broader indicators. The VIX, which is our fear gauge, closed at 14.25. That is an extremely low level. It tells us demand for portfolio protection is almost non-existent. The 10-year Treasury yield held steady at 4.7%. The dollar index is sitting below the 100 mark at 99.61, and the Chinese yuan is showing strength, with USD CNH trading around 6.74. Historically, when the dollar index is below 100, the environment tends to be supportive for risk assets, especially for emerging markets and Chinese equities. But here is where the action actually was. Gold. Spot gold rose 1.29% over the past 24 hours, trading at $4,436 an ounce. That is the strongest directional move we saw in that window. So while equities were flat, a meaningful chunk of money was rotating into safe haven assets. That tells us the market is keeping one eye on geopolitical or inflation risks, even as the overall tone remains calm. And then we have the A-share market in China. The growth style was clearly in favor during the Asian session. The Chi-Next index gained 1.12%, and the Shenzhen Component Index was up 0.45%. But the Shanghai 50, which tracks large-cap blue chips, fell 0.41%. That is a classic growth over value structure. And with the yuan appreciating, foreign investor risk appetite appears stable. There is no sign of capital outflows. Now let us talk about the divergence inside the US tech space. This is where things get interesting. The Nasdaq was flat, but underneath the surface, money was moving. The QQQ, which tracks the Nasdaq 100, was down only 0.16%. But ARKK, the innovation ETF, fell 1.92%. And MSTR, MicroStrategy, dropped a sharp 4.13%. Meanwhile, Bitcoin itself only fell 0.36%. This is a crucial distinction. The weakness is not coming from the crypto asset itself. It is coming from US equity investors who are reducing exposure to high valuation themes. They are rotating toward more established, more certain names within the tech sector. So what is the overall picture? The market is not in a single direction. It is not a bull trap, and it is not a reversal. It is a sideways market waiting for a catalyst. We have a lack of new drivers, and the data calendar is relatively empty. But the money is not leaving the market systematically. It is being redistributed among cash, gold, and growth equities. Let me give you our key predictions for the Asian session today. First, the A-share growth style is likely to remain relatively strong. We put the probability at 55%. The Chi-Next index is expected to trade in a range of 3,550 to 3,680. The core drivers are yuan appreciation and a weaker dollar. But watch the risk factors. If northbound capital flows out, or if US futures pull back, that could change the picture. Second, the yuan should remain firm. We expect USD CNH to trade in a range of 6.72 to 6.75 over the next 24 hours. The probability is 60%. The key support level is 6.74. If the dollar index breaks above 100.5, that would be a warning sign. Third, US tech stocks are likely to open modestly higher on Monday. Nasdaq futures holding above the 30,000 level would confirm this. The probability is 55%, supported by the low VIX and positive pre-market futures. Fourth, Bitcoin is expected to trade sideways in a range of 62,000 to 64,000. The probability is 55%. The crypto asset itself is stable, but the weakness in US-listed crypto-related equities could create some sentiment pressure. Now, a quick word on risk management. Our overall strategy stance is cautious with a slight positive tilt. Do not chase highs, and do not short the market. We are in a data vacuum period, and the risk-reward ratio does not support aggressive positions at the open. If the A-share growth sector opens with strong volume, or if Nasdaq futures hold above 30,000 and move toward 30,300, then you can consider adding exposure to the A-share growth direction. But if Nasdaq futures break below 29,900, or if USD CNH rises above 6.76, or if the VIX jumps above 15, you need to be cautious. And if the dollar index reclaims 100.5, that would be a signal to reduce all long positions. One more thing. Our system flagged some AI supply chain stocks like AOA, MXL, and NBS. These are all marked as pending verification. We do not have external data to confirm these moves, so we are not including them in any trading recommendations today. Do not chase them. Our probability assessment for today is as follows. Up 35%, sideways 40%, down 25%. Thank you for watching. We will see you at the next market update.